Want to invest like the young di Pertuan Agong? Keep watching. And guys, we do not own any shares mentioned on the slides. What we say is purely educational. It's not financial advice. Hey guys, if you're interested in building a 6 to 7 figure portfolio using the power of stock investing, head over to the comment section or the description to sign up for our free masterclass so that we share with you exactly how we do it. Okay, Jonathan. So our young di Pertuan Agong and Microlink, right? He had a 10.7% stake recently, December 22, give or take, announced. And the average price is around 55 cents.
Yes.
When he bought it.
Correct. So if you're curious how much is he making right now, I think it's up more than 80% to even 90%. Yeah, it's pretty good.
It is the Agong Catalyst.
Yes, it is an Agong Catalyst. So yeah, they actually bought around here at this point of view. And if you look at this stock as a whole, right, in terms of a 5-year span, you notice that actually this company has been doing pretty well also.
Yeah.
It's not just an Agong effect, but fundamentally it looks quite great. I mean, if you look at the share price movement, it's up 600% for the past 5 years. And
actually with 900%, right?
Oh yeah, this is 900% from 2019.
This is probably, okay, I can't really see, 20% odd.
Yeah.
Or less than 20%, sorry.
Yeah. Correct. So some facts about this company. Their IPO market cap is around 62.4 million.
Amazing. Wow.
Yes. So it is about 6 cents per share. And right now, it's actually up more than 15 times. Yeah, it's pretty good company. Yeah, it's a multi-bagger company.
So they do like computer hardware, nothing too special, right?
Yes, correct. It's actually nothing really unique. It's a very simple business. I mean, just a distribution business only. Yep. And they also provide like business and technical services for financial institution. And then they also do some tech services for enterprise. That's something like a digital software stuff.
Yeah, we'll go into each of these guys a little bit later.
Yeah. And this is their partners.
Interesting. Yeah. Wow.
So they actually work with Google Cloud, Hitachi, Microsoft, Azure.
All the big
Oracle.
Guys. Yeah. AWS, Azure, Oracle,
but
IBM.
This is not really a surprise also because other distribution kind of business and other software kind of business also partnered with them.
Right.
So yeah, don't be so surprised when they see like all of these big names.
Fair enough.
Yes. Okay, so this is the revenue by segment. So if you notice, right, the distribution services business actually only started on 2013.
Okay.
So initially they have this business segment called the Information Technology Solution Revenue. Which now they stopped doing already. I think there's like a business diversification or something. And hence you see the majority of the revenue now is their distribution services, which is the distributing computer equipment and hardware and all the stuff. Yeah. And if you look at the second biggest revenue portion is actually their enterprise solution revenue, which is something to do with software, programming, installation, maintenance service, all of these kind of odd stuff for this kind of business segment.
But guys, before we move on, if you're someone looking to level up their stock investing skills and you need a lot more guidance, we do have a one-on-one program called the Mentorship Program. If you're interested, you can apply it in the comment section or the description. All right, so now we look at some of the numbers. Quite interesting, quite stable.
Yeah.
From what I'm seeing, gross margins. That's what I like to see as an investor, stable gross margins.
Yes.
So one of the things I realized is that roughly around the time where they introduced the computer hardware stuff, that's when the margin started to drop, but that's when the sales started to go up. This is another law in finance. Not a law, like a basic rule like that.
When your volume is growing,
your margin will drop.
Your margin will drop. But if let's say your volume is small ticket item, your margins usually are very quite high. So yeah, nothing much to comment on. You already actually explained everything quite well. Okay, so this basically tells us that they are in a service-based kind of business. Reason why they're in service, you notice that the inventory is actually very close to none. They don't really hold any inventory in their company. It's more of just getting like invoices and then from their suppliers.
And I think the other thing to point out is that they seem to be in a position of strength. just based on this, right?
Correct.
More blacks than green.
Yeah, but the black one is receivables.
Oh, sorry, in reverse.
Yes,
in reverse.
yes.
Okay.
And then the green one is payables. So,
okay. But it's not too far away.
Yeah, it's growing in tandem.
Yeah.
So that is fine. Right now, they are in the net cash position. The reason why their net cash is actually not coming from their operation, I'll explain it right now, is because they actually did private placement.
Yes.
Yeah, they did quite a number of times already. Fundraising from the shareholders. Back in 2019 also, they did raise fund. Recently also, they also rose more fund. So yeah, that is something for you to know. And cash flow wise, they actually been doing pretty okay.
It's very impressive. Yeah. I'm a bit disappointed that I never
look at this before.
Yeah, honestly speaking.
Yes, exactly. But yeah, it's just one of those stocks.
So returns on capital also
it's okay right
decent.
now. Yeah, it's pretty decent. It's definitely much better than how it was in 2007.
Or even here, this period, 14 to 16, 17,
correct.
like that.
So right now they're in double digits, pretty decent.
Alright guys, enjoying the video so far? If the answer is yes, remember, like, comment, subscribe. And as far as comments go, if you don't like the video, do let us know as well. We always take all sorts of feedback, as long as they're constructive. All right, so here's some of our takeaways. I will comment on the part about private placement first. A lot of it is used to working capital, right, for the funding of the day-to-day operations of the business, which a little bit of a concern for me, right? Why do they do that when they've got decent cash flow and things are restarting? Business seems to be doing okay, but why are they doing that, right? Not sure. But what else? What other takeaways do you have?
Yeah, actually really nothing much. They are in an ICT distributor. There's a lot of companies that is doing this kind of services in Malaysia. Also public listed ones also. You can see one of them is actually VS Tax also.
Yep.
Yeah, I cannot remember what other more. Oh, Hashtag
Senheng.
also. Senheng also. Senheng also. Hashtag going to be soon, but so far nothing yet. But yeah, and they are actually right now at a very premium valuation. Yeah. So they're trading at a 25 times. So I'm not sure whether this is sustainable or not for an ICT business. I would say their profit is bad, but it's the growth is actually pretty small.
Yeah.
It's not that exciting.
It was a value stock back in the day, right? Because if you imagine, I think cash flows were only slightly lower from what it was today, right? If I recall.
Yep.
And
and
it's 25 times earnings. So the stock has gone up 900%.
Yeah.
So you're looking at, in the past, probably 5-6 times earnings. So it was a value play.
Yes,
it's not a value play anymore.
Yeah. So the question to you guys who actually are interested to invest with Agong, right? Can it 2 times some more? So that's the bigger question, right? I don't think so at the moment. It's pretty expensive valuation right now. But it is a good, it's a company that you can put in your watch list and just have a look only.
Yeah, it is fundamentally quite a sound company.
Yep. Just stay at the sideline at the moment. But that's for me. I'm not sure whether you guys, whatever you guys.
I think to realize, and I think the video after this coming up next, we'll talk about Howard Marks, right? So today as an investor, you want to be more strict with your valuations. 25 times in 2020 or 2021. I think it's okay. But in 2023, it's going to be quite challenging.
Yeah. Okay, I think that's about it for Microlink. But before we go, as usual, FIRL Pro. So if you guys haven't checked out FIRL Pro yet, please do. You can just go to our website and see what is it about. But this is our stock performance for December 2022. Pretty proud of it actually. You can see that most of it are actually up. Only like 2 stock is down 1%, and then the other one is about 4%. While the rest is actually up like 70 to 30, 40%. So that's pretty decent. So if you want a sneak peek about what is FIRL Pro all about, and also if you want to find out more about SIB, we have a sample for all of this, for all of our courses. The link is in the description and comments, so you can just check out the free samples.
And if you have any specific questions or clarifications, just send us Instagram DM, send us an email at hello@firl.co. or of course, you can just type in the YouTube comments and we will address them.
Yeah.
But yeah, guys, thanks for the support as always. Whether or not you hop on the program, we hope to see you in the next video. Peace.